Hey everyone, welcome back to Corporate Decoder, the place where we unpack exactly how corporate giants like this are really doing behind all the fancy words and numbers. And let me tell you, this filing from Customers Bancorp is a doozy, a real deep dive into the world of banking numbers that might make your head spin. But we're going to break it down so you understand what is really going on. So what is Customers Bancorp Incorporated reporting for their fiscal year ending the 31st of December 2025? Let's dive straight into the financials. At the end of 2025, Customers Bancorp had total assets of nearly $25 billion. That is a pretty big number, a jump of about $2.6 billion from the previous year. What fueled this growth? Well, their loan portfolio is a big chunk of this, shooting up by almost $2 billion. That means they are lending out a lot more money. Now, how do they make money? Their net interest income, which is basically the difference between the interest they earn on their loans and investments and the interest they pay out on deposits and borrowings, jumped by nearly $100 million compared to 2024. That is a solid 14.7% increase. But with more lending comes more risk. Their provision for credit losses, which is money set aside for potential loan defaults, also went up by about $24.5 million, about a 33% increase. This shows they are being cautious about the rising risk that comes with their growing loan book. Their non-interest income, which includes things like loan fees and lease income, also saw a healthy increase of over $7 million. However, running a bank this size is not cheap. Non-interest expenses, largely driven by a $13 million increase in salaries and employee benefits, went up too. This makes sense as they are hiring more people to manage this growth, including 91 new team members in 2025. All this activity resulted in a net income increase of about $42 million, bringing their total to over $224 million for the year. And for common shareholders, that is over $209 million. A good result. But let's see if the risks are being managed. Now let's talk about the risks. The filing openly admits their business is highly susceptible to credit risk. This means the chance that borrowers won't pay back their loans is a constant concern. They have an allowance for credit losses, or ACL, of over $155 million at the end of 2025. This is set aside to cover potential losses, but if those losses are bigger than expected, their profits could take a hit. They also highlight that changes in their loan portfolio composition can increase lending risks. This means focusing more on certain types of loans like commercial real estate can be riskier than others. With commercial real estate loans making up over 91% of their portfolio, any downturn there could really hurt. Speaking of risks, they specifically call out their New York State multifamily loan portfolio, noting legislation could negatively impact it, with about $1.2 billion in exposure in New York State and a significant portion of that in rent-regulated units. Changes in rent control laws are a real concern. Then to raise cybersecurity, their proprietary B2B instant payments platform Cubix is a big focus, but they admit their systems and those of their third-party providers could be vulnerable to hardware and cybersecurity issues. This is a huge concern in today's world, and any breach could be disastrous for their reputation and operations. And no company filing is complete without mentioning internal controls. They acknowledge that an effective system of internal controls is vital. While they believe theirs are effective, the reality is that any failure here could lead to significant problems impacting everything from financial reporting to legal compliance. Let's look at their capital situation. The bank and the Bancorp are subject to strict regulatory capital requirements. At the end of 2025, they were well above the minimums, which is good news. This means they have a strong buffer. Their Common Equity Tier 1 capital ratio, a key measure of financial strength, was over 13% for the bank, significantly higher than the required 7% under Basel III. This shows they are not just meeting the rules but exceeding them, which is a positive sign in a closely watched industry. In terms of fair value of their financial instruments, they report significant numbers on both sides of the balance sheet. On the asset side, it is over $3.6 billion for recurring fair value measurements. On the liability side, their deposits alone are valued at nearly $21 billion. These fair value figures are crucial because actual market conditions can swing these numbers, impacting their overall equity. Digging into the loan portfolio, the allowance for credit losses, or ACL, stands at about $155 million. Their net interest margin, a key indicator of profitability, was 3.32% in 2025, up from 3.15% in 2024. This improvement in net interest margin is good, showing they are managing their interest earning assets and interest. bearing liabilities effectively, likely benefiting from a shift towards lower cost deposits. So what is the big picture? Customers Bancorp is growing its assets and loans, and its net income is up significantly. They have a strong capital position and are navigating market risks, including interest rate fluctuations, with strategies like hedging. However, the risks associated with credit, cybersecurity, and regulatory changes are always present and require constant attention. The company seems to be strategically expanding, particularly in specialized lending and deposit gathering, aiming for organic growth and opportunistic acquisitions. Their focus on technology, like the Cubics platform alongside a personal touch, is their differentiator. Overall, Customers Bancorp appears to be on a solid growth trajectory, but like any financial institution, it faces inherent risks that require vigilant management. The ability to maintain this growth while managing credit risk, cybersecurity threats, and evolving regulations will be key to their future success. That is our deep dive into Customers Bancorp's latest report. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord in the description. Thanks for watching. See you next time.